It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And what our forecasts are showing is it is highly likely that Perth is going to surpass that $1 million median house price by the end of this calendar year, which means it's only going to be Hobart and Darwin that are sub $1 million pricing.
And that is Nicola Powell from Domain this morning as we welcome you back to the Real Estate Breakfast, connecting you to the best real estate information across Australia 7 days a week as we take that closer look at property from multiple angles, because as we know, not all real estate trends are the same, which is why we talk to the real estate professionals around Australia for the bigger picture. And the working week, it's rollicking by. Thursday, May the 22nd, and despite recent softening, property prices across Australia remain significantly higher than a decade ago. We'll take a look at this in just a moment, because Sydney values are down just 1.1% from their peak over 10 years. Melbourne has slipped 5.4%. Meanwhile, Brisbane and Adelaide, they have hit some new peaks. But right now, let's catch up with Nicola Powell from Domain, who is the Chief of Research and Economics. Welcome back to the Real Estate Breakfast, Nicola. Here we are 2 days post the RBA cash rate reduction. So what did you make of that, and what do you think moving forward?
A very good morning. Look, I think it has been a big week. It's almost been like Christmas for those who have a mortgage, welcoming that rate reduction. And I think that, our expectations has been for multiple rate cuts over this calendar year. And I think particularly after Trump's Liberation Day, that really did alter the interest rate expectations, not only globally, but also domestically for Australia. And what you've got is the markets are pricing in multiple rate cuts over 2025. Our expectations, I think that we are going to see more rate cuts coming through. I think we're predicting one to occur in August, another one to occur in November. So I think this is obviously good news for mortgage holders, good news for those who want to purchase a property. And what you tend to find is that there is a relationship, obviously, between pricing cycles, so house price cycles, and movements in the cash rate. And what you tend to find is larger capital cities such as Sydney and Melbourne, more expensive. They're much more sensitive to changes in economic conditions. And so what we're likely to see is the impacts of the reduction in the cash rate are going to be amplified through particularly Sydney's housing market more quickly than some of our more affordable capital cities. So we think that it is going to provide a little bit more momentum into price growth. And it's been interesting, even when we think back to that February rate reduction, we were already seeing buyers reacting to even that rate reduction prior to it being delivered. Because if you remember that period of time, we were all like, it's going to happen very soon. And we started to see really buyers coming out. And the consistent trend overall has been an increase in buyer inquiry. So that does tell us interest is rising, and particularly in, I think, a market like Melbourne, which has been undervalued and underperformed for many years now.
Yeah, and just having a look at the prices that I mentioned over the last 10 years, you have a look at a Sydney, they're at a minus 1.1%, still sitting there at 61.6% rise. But my goodness, you look at a Brisbane, over 91%, Adelaide over the last 10 years, 93%, Perth at 55, 86, Hobart, you kind of quietly forget about them, and regional New South Wales absolutely on fire, 97.5%. Some big moves there across 10 years.
Yeah, we have seen some big moves, and really most of that growth is really kind of that past 5-year period, particularly when you're thinking about those cities such as Brisbane and Adelaide and Perth. We've seen all of these markets see strong growth in recent years. And if we separate out the figures there, you were talking about our dwelling prices, if we separate it out for houses and units, this is where you start to see the real difference in property type performance. So when you look at house prices in Brisbane and Adelaide, they've increased by over 100% over 10 years, almost like 110% in a 10-year period. But when you look at units in Brisbane and Adelaide, Brisbane units are up almost 70% and Adelaide units up 90%. So we've actually seen a bit of an outperformance of house prices relative to unit prices in those two capital cities. But they've really been leading the way in terms of price growth, and particularly Adelaide. Adelaide's been this kind of unstoppable property market. It's been quite wild, really, I think, to watch what has been always dubbed Australia's quiet achiever for the last 35 years. That has been Adelaide's housing market, but it has absolutely smashed that expectation over the past 5 years and has really been one of the capital cities that has been the standout performer.
Absolutely, no question about that. Now, sticking with the prices, a new global housing study has labelled Sydney, Melbourne, Adelaide and Brisbane as impossibly unaffordable markets based on the gap between house prices and household incomes, which is a very sticky wicket. Sydney ranked second only to Hong Kong, with Brisbane's median multiple at 9.3 and Melbourne's at 9. Now, Melbourne and Brisbane were rated less affordable than global cities like New York or London. So again, it's all pointing in that direction of unaffordability.
It is quite grim, I think, when you look at that stat ranking on a global scale. I think the thing that I would layer it in with is Australia is home to some of the least dense cities in the world. So while we do have a very high property price relative to what that income is, that household income, what I think you get, obviously, in a market like Sydney, Melbourne, Brisbane, relative to what you would get in Hong Kong is going to be vastly different. We know Hong Kong is really high density, high-rise apartments. And I think this, really paints, obviously, that grim picture, but it also is another way to really kind of emphasize that we do need to increase density in some of our bigger capital cities. We have some of the least dense cities in the world. We live in large homes, and we're global cities, right? Particularly when you're thinking about Sydney, Melbourne, these are large cities, they're global cities. And I think that what we need to ensure is we do have greater density, we do have a diverse array of housing. And when you look at the price point, when you look at Sydney's median house price, it's just under $1.7 million. So it is an extremely unaffordable market. And even when you think of unit prices, the median unit price currently in Sydney is almost $825,000. So it is a high-priced market.
Yeah, and the other thing that you should probably weigh in on is the size. So you're actually getting probably a little bit more space in a Sydney property versus what the square meterage might be in Hong Kong. All right, we are talking to Nicola Powell from Domain. More after this.
If you're a new listener, welcome. We talk to the most knowledgeable real estate experts across Australia every day from 6 a.m.
Now, let's go from all of that into you deciding to go into the hospitality business with your partner, Roger. You reinvested some of these renovation profits, etc., into a boutique wine bar in Ipswich. You're a busy person, Victoria.
Yeah, so after moving out here, we realised there was nowhere to go. So we came across a lease for a beautiful heritage building. It's all exposed brick beams and a beautiful laneway, and we couldn't not take up the opportunity. So now we own a wine bar, and that's probably been the most challenging project of them all. It makes renovating look easy.
We help to break down real estate every day to help you better understand the Australian property market.
And it is a Real Estate Thursday. We're talking to Nicola from Domain. Over 30% of Australian homes now, Nicola, cost over $1 million. Once again, that is highlighting the deepening challenge of housing affordability in this country.
It absolutely is. When you look at house prices across our major capital cities, Sydney, has had a $1 million median house price for some time, but we've got, Melbourne's above that $1 million mark. We've also got Canberra, but the new additions, we saw Brisbane surpass that $1 million median house price towards the end of last year, and Adelaide actually achieved that over the first quarter of this year. And when you think about the other markets, that only leaves Perth, Hobart and Darwin that have a median house price below $1 million. So only 3 out of our 8 capital cities. And what our forecasts are showing is it is highly likely that Perth is going to surpass that $1 million median house price by the end of this calendar year, which means it's only going to be Hobart and Darwin that are sub $1 million pricing.
Yeah, if you go back a few years ago, you would never have actually forecast that Perth was going to hit that median price of $1 million. Now, one of the biggest drivers of continued price pressure is this imbalance between population growth and housing supply. Cities experiencing strong inward migration are outpacing the rate of new housing construction. I mean, builders are still struggling with this elevated cost and persistent labour shortage and trying to plan their systems to respond to that big headache, which just seems to be exacerbated at the moment.
It is challenging. I think it's been a very challenging few years for the construction industry. And what you've got is a vast price difference between buying a new build versus buying an established home. And that's why we continue to see demand being steered towards established homes, because technically they are a lower price point than purchasing new. But the challenge is for the construction industry is the feasibility of projects, which means that the costs to build them are just not meeting the pricing expectations that they can sell them for. And that is a really massive challenge. We have seen an escalation in construction costs. And while over recent times we've started to see the growth in construction costs start to plateau, it is still extremely elevated compared to, say, 5 years ago, back in 2020. And ultimately, we have an undersupply of housing, and population growth is one of the key drivers of demand for housing and price growth. And we have ultimately not built enough homes to match population growth. And generally speaking, it is those areas that have seen fast rates of population growth that are really seeing the impacts of undersupply, escalating prices. Ultimately, what we really need to do is stimulate the construction sector. We have to also consider property is one of the most taxed sectors of our economy, and taxes alone can add up to 40% to the cost of a new home. Now, that is extraordinary, an extraordinary amount of tax red tape that a buyer ultimately is paying. And I think what we need to do is really incentivize development, reduce that cost base as well, to be able to provide supply at a lower price, but also with speed.
Always something going on, isn't there, Nicola? And that'll do us on our Thursday morning. Thank you so much, as always. You're right across all of the property information. And thanks for your inputs onto the Real Estate Breakfast this morning.
It's a pleasure. Thank you.
Decode the property market with insider knowledge and insights to better navigate your real estate journey. Let's explore together the power of real estate.
Pre-approvals are up, especially among second home buyers who may have sat out the uncertainty of last year. Refinances are also hungry for better rates and structure. This is creating an influx of interest in the market again.
Yeah, so what about the banks? Because it feels like the banks are being a little bit more competitive. We're in a different dynamic, and the competition within the banks are heating up.
Well, that's correct, Craig. And I think if the lenders aren't passing on the discounts, a lot of consumers they're searching, so they're ready to refinance. They're not staying loyal to their lenders anymore, which we always encourage. NAB, Macquarie, Bank Australia, we saw them cutting their fixed rates before they had even announced the cash rate discount. So the lenders are getting prepared.
We connect you to the best real estate information across Australia. The Real Estate Podcast.